Good morning, everybody, and we got about a minute left. So I'm gonna just sort of get ready while everybody gets comfy. Get your popcorn out, and I let's with start with the chart, as they say. Okay, so a quick review of yesterday, not to beat a dead horse. So where? Yeah. Okay, so yesterday we had the CPI numbers. We had overhead calls long for 50, and we still have them for 6,300. A lot of them in the AM monthly and the PM monthly rather. And we had short calls up there, market maker long calls up here at 6,300. Once the unknown became known, once the volatility came out of the chain, we were kind of already up. Market makers hedged that. We kind of went up. Then we stalled and broke down through some levels at the same time. VIX was acting funky. And once VIX started going above 17, remember we were talking ad nauseum about all those VIX puts there at 17. Then 17 became the big inflection point for VIX over under throughout the day. And then we just kind of went, these aren't yesterday's levels, but then we just kind of went level to level basement. And a classic after we broke each sort of level to where we ended up. Okay, so we ended up closing down around whatever it was. I got in my notes around 25 points at 62.35, which was one of the levels. We kind of broke through all the levels, ended at around that market maker, right below that market maker low to right on it, give or take a point. Okay, overnight session, we continued to look nasty. Undercut this 6,200 to 62.25, 30-ish area, which we'll look at in a minute. We had this brief undercut at 3 a.m. I don't know if some foreign market opened then. Looks like once that was hedged out by whatever desks hedged that exposure at that time of the morning, or maybe this was the hedging. Um, then we kind of just retraced all the way up to now we're looking like we'll have a green open. Go figure. Okay, so for today, we have PPI, Beige Book. We got, I think, one Fed person yapping at 10, I think. Um, Additionally, we have, and I'm not a macro bro, but I put it on Twitter from what little bit I could figure out. Also going on yesterday, amidst all this stuff, was the reaction to the CPI. While initially, whatever it was, and the unknown became known, then we saw the 10-year climb, the dollar, the 10-year rates climb, so a 10-year decline. We saw 10-year rates go up. We saw the 30-year, I think, above 5%. Uh, Over in Japan, there was murmurings about they're going to be spending money, and I think the Japanese bond, whichever one it was, hit 2.5%, which was near some Bank of America red line. I'm saying all that to say this. We've got a lot of macro cross currents here that could just fade away or be lingering in the background, along with the VIX expiration cross current that's happening today. But that will sort of fade a little bit over time, but it's going to stay on. I'll talk about that in a minute. We have options expiration coming up on Friday, also Friday, let me remind you, and we'll talk about that more too, that Friday QYLD and the LYLD family of funds sell at the money calls for RUT, SPX, and NDX a month out. So they'll be selling all those negative deltas on Friday, with Friday being options expiration day. That might push us down to an inflection pointy kind of level that leaves us fragile Monday. I don't know. This is just all going on in the background. PPI with good numbers. Okay. Oh, look at that. Okay. There's a PPI. Thank you. Yay, PPI. All right. So now the macro cross current gets even muddier because CPI is bad, PPI is good, elemental P is this, and all the macro bros can pontificate, and we'll see. We'll see. So, with that said, let's see where we are. Now stuff gets interesting. We're over that 40 inflection point. I'll show you in a minute why it was an inflection point. Heading up toward here, where you will see we have some stacked long calls, and suddenly the whole the whole complexion changes. So, without further ado, let's look at where we are. Okay, so here's options depth, and we'll look probably at a few other of these gurus while we're at it. Here's option that, and all these people are data providers. They just give you data. Who's ever data? I like their data. I like their interface, etc. And so different data providers have different secret sauce. And anyway, it's up to us to interpret the data. Was my point, not the data provider. The data provider just gives you a tool. The hammer or the saw doesn't build the cabinet. The carpenter does. So we're the carpenters. So anyway, so this is a market maker long strike. Now, it doesn't really matter that these are customer market maker short. It doesn't matter these are customer long puts. They end up having the same effect because market maker has to hedge out their delta. It matters a little bit ish, but not really. So over 62.40. So trust your eyes. I say this every day. Your eyes are a good filter. I got that line from Paul Duncan from Gamma Edge, and it stayed with me. Your eyes are a good filter. Trust them. 62.40 to 62.85 broadly is kind of the playground for now. In this playground, we have potential stalls, market maker long. So that's mean reverting as you get up to it, but we can chew through it. We chew through it almost, pretty often. And then if over 62.60, as I said, we have this void. A little bit of a magnet, we have this void. So then you enter the 60.80 void with goes up toward here. And I'm just pretending nothing else is around it, but see us pretending in isolation. Goes up toward here. Market makers have to sell. But goes down toward here and they have to buy. Mean reversion, so they sell as it goes up and they buy as it moves away. You have the opposite same thing happening on the bottom. They buy as it moves down and they sell as it moves up. So one would expect to get caught in the 60 to 80 zone. 75 round number is always a good place to look ish in here. But we also have this stuff on top, and I don't know how much one cancels the other out. And we have all these sold calls up here, but again, we have a stack. We have this little stack up here. Not saying we get here, but it's there. So Let me make sure I got the right day on, 'cause I had the wrong day the other day. So reviewing 6240 to 6280 broad zone with this stall at 60 with door opening up to go in here and then to kind of get pushed back down. If we end up below 40, red on the day, then we enter this new zone. Market maker short here, market maker short here, magnets hedging in the direction of the move. So if we break here, below 50-ish, the hedging goes this way to 40. A little bit of slow down speed bumps at the bottom of the chop zone, 25, 15. Just kind of have to pick an arbitrary number somewhere. But we got these magnets here. But right below them, we got bigly sold puts like 11,000 customers sold, market maker long. So TLDR, we ain't going down there unless something really happens. Looking at it in the heat map format, which takes everything into account. Let me just make sure I got the right thing. Oh, that's gamma. All right, let's see. That was position number. This is gamma. Well, actually, let's leave it on gamma. Let's look at position number. And we'll switch it to gamma. What's the difference? The difference is position number. There's a lot here, but when we're too far away from it, the gamma is minimal. The hedging impact only happens as we get closer to it and as the time to expiration gets closer to it. So that's why when we look at position numbers, we know what might be coming, even though it might not be a big deal now. Let me just broaden this out here. Randomly pick a number. Let's open the top up a little bit to 6330 away from the round number. And so you can see the size-wise in context, here's that big support area all the way down here. Here we have this on top, and in here is small stuff. All right, now let's zoom her in. Because actually, when you look at it this way, from a wide angle lens kind of view, I want you to see something. I want you to see the reds. So it's not a lot. It's light red. It's not this. But there's basically a lot of local short gamma. Not big colors, but a lot of local stuff. What do I mean by that? Pet peeve. People who arrive at gamma, like I have, like most of us, first seeing this service and that service, or reading about it and reading whatever, or watching a YouTube video. Hear people talk about we are in long gamma or short gamma. For our trading purpose, we are not in anything. There's local gamma nodes where market makers are long or short, above us or below us, that exert an influence. So, yes, it's okay to think broadly. Market makers are long gamma or short gamma throughout the complex, whatever. And there are times that sort of makes sense. But for me, it was helpful to get used to thinking in the context of local. What am I trading? Doesn't matter to me that market makers are long gamma down here at 6,000 today. That don't matter. That's far away. They don't have to hedge it. It's an asterisk. What matters is what goes on here. Okay, rant over. So So that's what we got here. And, so again, just a quick reminder, and it's in my daily plan, more detail to the Substack subscribers or to the few Discords that I'm associated with. They get the full deal. Other people get the abbreviated deal. Um, all the intraday updates just go to other people. Anyway, forget that. Forget the marketing pump. We have this. Okay, so we have this 85 here. We know these zones. Okay, switching gears for a second. Let's go to an option chain because I'm assuming that we're all option traders. All right, so here's VIX. These are ones that I've been showing you this. I put this on a long time ago. Whatever it was, just one for science in this. However, this hedges out, it hedges out. I make $60. Yay me. Okay. Now, I mentioned in my note, oh, I don't have that here. I did it in a different account. But I mentioned in my note and in the other account, well, it doesn't really matter. Okay, here's what I want to see. These were 25 and 22 delta in the overnight session. We bottomed out here. Those are high convexity areas, and that's where there's big numbers. That's where we bottomed out. No coincidence. Now, this is 8 delta and 6 delta. Now it's kind of meaningless unless we start heading down that way again. So I just wanted to point that out. Just wanted to point that out. And I guess this is stuff that I was trying to sell that maybe I'll sell. I'm not sure what these are. Doesn't really matter. So let's take a look at, yeah, I guess these were ones I tried to sell that didn't get filled. Let me see what I got going on here. Yeah, it looks like I was trying to sell this and it didn't get filled. Oh, I put that in. I see what I did. I put that in as a trade to look at, but obviously we don't want to look at selling 62.70 now. So let's forget this. That's why I put it in. I think that was like the top and bottom of an expected move at the time. Let's forget this. And let's 15 delta. Okay, this was another trade looking at. That was about $1.50 yesterday. I did a couple for science, something I'm thinking that I'm going to be launching, and and my thing is I'd buy those at 50% profit around here at the end of the day and call it a day. All that said, so what have you done for me lately, dude? Okay, so remember we had that 85 was the area. If we can get over, I mean, we'll start off with my wish trade, Iron Condor. I'm a premium seller. Um, if I could get 45 cents for that, I take it. Just put in one. I like to sell them wide. We'll look at some narrow ones too. We have this 6205, 6200 magnet. I don't want to mess with those people, at least not for now. So the other one, 40 cents. I'll take one. Put another one for 55. I'll see if I can fill it out. Let's see what else we got going on here. Now, where are we? So we're zooming. I'm looking at this and we're zooming. So obviously, okay, so we're at 60. Okay, so we're still kind of within the zone. Remember, we had that. And I think, where'd we have those short? Let me go back to here. We got some stuff here at 25, 15. So if I wanted to be over this, 15, 10, somewhere in there, knowing that it might get a little spicy should we break 40. So let's just look here. It's something like that. And knowing that it might get spicy, I might also add one more here like this to make it a fly just for my own psychological comfort so it doesn't be spicy. Or about this over here, actually, and sell another one of these. Something like that. Creating kind of like a condory looking structure. Just one more for the psychological effect. I'll tell you the truth. The 45 cents, I'm willing to give that up and I can always trade around it later. Just so that if we go down, there's something that kind of acts as a buffer on your P&L. Iron condor trading, as Yogi Berra says, iron condor trading is 90% mental. The other 50% is knowing what you're doing. And so, yeah, I'd probably be willing to accept this, but I mean, the PPI seems to be what's ruling the roost right now. VIX. Okay, we have the SOQ coming up on VIX. Let's see how VIX is acting. Oh, look at that. VIX below 17. Okay, so all the fear that was just for the moment is now we still have to watch 17 inflection point. Let's go back here. Let's go. We'll look at gamma edge and then we'll look at the. Okay, obviously reads. So let's see what's going on here. I saw some, I think 1921 kind of stuff coming in. So what's it? 17 over under still, but remember these deltas came yesterday and what came in. I saw a volume on a lot of calls 19 and at 21, and so over 1950 into August is where things really spicy. Obviously, go up. The more we go up, the spicier they get. So keep an eye on those levels. These 17. These are the puts. Now, these what yesterday hedged those hedged immediately with the call buying. Now it's gamma, so rate. So assuming that some stuff will come in today that didn't come in yesterday, so the so I would be thinking they'd be buying call. I is going to go back above today, maybe towards 1850-ish. That's something I'll keep my eye on. So yeah, and covering yourself accordingly. Let's look at my boy. Who remember me? Let's take a look at that. I really want to see here. And also, we're going into a seasonal period. It kind of tends to go up. Let's just look at. I like this view. Plentiful. Is a open interest. Puts and calls. pretend everything is long. Open interest, we don't know what's really there. But what we do know is these are way more deltas than that. That's where we're buried, 17. We have this whole zone, 17 and 20, where we're going to assume that people bought 20 puts. I'm going to assume that. And so here we kind of have a Greek whatever, Mexican standoff. No, hope I'm not, don't get canceled for saying that. Here we have a standoff. It's fine. Uh, Standoff with deltas probably being roughly equal. Head that way against the hedging is in favor of VIX going up. We have this stuff to eat through. Then over here we enter a whole new. And so again, trust your eyes where balance points are. Nice, just clean. Let's look at open interest. Nothing fancy. All right. Now let's take a look over here. Quick game of pinball because okay, so likely pins or possible pins. Down goes Fraser Day down here in the 62, 10, 20 area. So those puts down there are risky in theory. The 40-50 area, 57.5. Looks kind of likely for now, or maybe this little notch in here at 25. If we get balled up a little bit right here, if we get balled up a little bit right here below that 80 area that we looked at before, on, all the way up to here. Most likely 55-ish or 75-ish based on where we are. If we end up closing down flat on the day, when price moves, this will open up and change. So this is kind of if we're roughly where we are now. Anyone want to play pinball or any questions, any comments? I'm going to do that for a second. I like that one too. So I would look for a fly, and in a minute we'll look for a fly. First, I want to do the shameless plug promotional thing. So if you're watching on YouTube or on Twitter and you'd like to join my Substack, free or paid, I'd prefer paid, but free, you get plenty of information. That's where you could go. What else do we got? What else do we got here? One of these days, when I grow up, I'll have an admin do this for me. Discount link for Mentor Q, and they're having a sale. I think they're still having it. Oh, and we got a bull in the house, kind of figuring where we are now. And we got discount link for options depth. Other people have promised me discount links. I haven't gotten them yet. So that's that. Okay. Let's go back to the screen real quick. Real quick game of pinball. And let's see. So we have two numbers. We have the 70 pin person. Now let's just look at so that would be a 70-ish pin. Maybe we want to go. Do we want to go something like that for $1.40? Or do we want to be cheapskates and move it up? I'm willing to throw that in for $1.35 to see what happens. I can always manage it. Then we had 57-ish, right? So then for that, oh wow, 63.10. Oh my God. Okay, can always buy that for 10 cents. On the put side, what was our downside one? 57. Okay. So if we're going to close at 57, we want to be right in here, in theory. 40 cents. Let's see what happens. Boom. And 10, huh? Well, for 10, I could be a sport. We're going the wrong way. I could be a sport and go all the way up here and do that for 20 cents. For 20 cents, that's might be fun to, you probably don't hold that to the end of the day, but might be fun. So we got a high of 63.10. Then we have a couple somewhat conservative ranges that we're in now. 70, if we get above that 65 area, we kind of been stalling out here. 68 is on those good days. Or we manage to stay above 50 and we get caught below. We get caught below. So let's think this through. 57, we're like caught right below this. We're kind of stuck in here. 70, we get over this. We have this big void and under this. So this area is cleaner. It's a cleaner structure. This area gives you a butterfly. The next butterfly that is given to you is 60, 40 is a butterfly in here that's not as clean. Not saying that that's where we close or not. I'm just talking about how clean the structure looks. Range for today. Okay. So, and let's do it a few different ways. So my chop zone, we're already on the top of the chop zone. So you have to, that was before the number. So let's actually recalculate or refigure the range. But the range is going to be 40 to around 65-ish. Let's look at where the levels are. Okay, so 32, and where are we now? We are, whoops, let's get back to SPX. We're at 55. Okay, we're at 55. So 55, call it 35-ish points, 30 points is 85 on top. 55, 30-ish points is 25 on bottom. I think the range will, and because of the negative gamma, we do have a potential to play with those ranges. That's why when we talked about it, let's think of a range of ranges. So one range is this 40 to 85 area if we want to be wide, or this 40 to 60, 65 area in here. So 54. If we break this 40 and we don't get sucked back up into here, then suddenly we enter a new range. And suddenly we got this 25 to 50 range. As of now, that doesn't seem likely, but remember, we're only right here. We're only right here. And so we can say the ranges are kind of the close range, 40 to 65. Then if they break, our ranges move. Does that kind of make sense? I wish I can give you a better answer. I'm willing to sell calls somewhere up here. I'm willing to sell puts. I'd like to be down here below the 6,200 mess. I think I have this here. Here I just sold these yesterday. This is part of my science experiment that I did yesterday. And looks like the experiment worked pretty good. This will be one of my features. Hopefully, the science experiment paid off. And this was based on something that I'm working on. I like it. I'm willing to give him 15 cents and just get out of this mess and make $500 before the day starts. It's always good to have a nice little $500 cushion. I'll leave it at 20 cents. I'm not trying to save $20. I had more calls here, but it looks like whatever was there closed. So I sold those earlier, 15 cents, let him take it, and that's that. Okay. Yeah, and I would leg in, but the problem is with the bottom, we have those long puts, but they're probably not going to realize. And so for me, okay, I don't mind selling wide and far. That's not everybody's playbook. Okay, so here I have some flies I was messing with yesterday. Those are off to the side. So ideally, I'd like to be below the 6,200, but if I can't, we have that 25 where there's sold puts. We have a range here of 25 now only, which puts us right in the range. We'd rather not be in the range. We'd rather be somewhere around here. And so the put side is a little trickier at the open, depending on your risk tolerance. I do. I do this kind of regularly. And let's see what I have. I already closed one or two of them for Friday. So I already closed a set of call and put ones for Friday. And Now I have another set that I built. Whatever day I did that, I did these 715. I did these yesterday. So these puts I sold yesterday on the pullback, but still within the range. These calls, when did I do these? Also yesterday. So whatever I had on top closed, and so here's what I'm sitting with for Friday. But yes, I do that too. Private chat. 6260. Yeah, okay. David's in the same range. 60, 57 and a half in there. Okay. And VIX was down. We have the SOQ. Oh, I'll find out about the SOQ. I'll post it somewhere. And I'm going to run. Trade safe, everybody, and see you at 3:30 for pinball. This time I'll make sure my headset's charged so I can actually do it. But we played pinball, locally, for my subscribers on StreamYard or whatever, and that was fun. Okay, take care.